Let's talk to Connor Campbell. He's a financial analyst at Spreadex. Very good morning to you,
Good morning.
Connor. Right, let's cover cable and FTSE. Let's kick off with the Great British Pound against the US dollar. Headlines and thoughts?
Yeah, it hasn't had a very good last few sessions, pulling back from that, nearing that 143 level, now it's back below 1.4. Obviously, the big focus this week, Bank of England's Super Thursday.
Is it going to be a Super Thursday?
I'm not quite sure. I think, obviously, so far in the last few sessions, it's been dealing with the dollar's renewed confidence in the US. The thought that interest rates in the US are going to rise faster than expected. Inflation seems to be picking up in the US. As the week sort of turns in the second half of the week, I think the focus is going to be more on the Bank of England. There has been a lot of speculation that Mark Carney and co will use Thursday's meeting to sort of potentially tee up their own faster than expected rate hike schedule, potentially a rate hike as early as May and then one in November. So I think that is how close the Bank of England is to those expectations on Thursday. I think it's going to dictate how the pound moves in the second half of the week. I think if they do, a few slight shifts in tone and pointing towards a May rate hike, then that's likely going to help lift the pound away from these sub 140 lows. On the other hand, I think because there is that underlying expectation there, and it's also having a bit of a nightmare already. If the Bank of England is more dovish than forecast, then I think it could be a pretty horrible end to the week for the pound. Continue the sort of the difficult trading it's seen in the first few days of the week. Elsewhere on Friday, you got the manufacturing and industrial production figures. It's hard to see them really impacting too much. You saw the last few sessions with the manufacturing, construction and services PMIs. They were all pretty bad and they didn't have too much of an impact. I think maybe on Monday the services PMI exacerbated the pound's already ropey performance, but not in any way that made that the focus. So I think on Friday it's still likely going to be the continued trading off the back of Thursday's Bank of England meeting, be it because the pound is overjoyed that it looks like there's going to be a rate hike in May, or disappointed because it hasn't met investors' expectations of a fairly hawkish, or a shift towards a hawkish report from the Bank of England.
Clients,
they're supporting it below 140 since it's fallen below that level. We've seen people pick up. I think again heading into the Bank of England meeting on Thursday, and based on some of the reports coming out, the weekend's papers on Monday.
Understood. Let's move on to the FTSE100. Obviously, not great little charts right now. Key events.
Again, I think the key event is Bank of England on Thursday. Again, I think it's the toss-up between is it as hawkish as some of those reports over the weekend suggested, or by dovish I mean just nothing changed. I think because there is the expectation of a slightly hawkish statement on Thursday, dovish will be anything that is just unchanged, the same. He's obviously going to hold rates on Thursday, so it's going to be those slight the odd word change here and there that is used to tee the market up for something later in the year. In terms of clients, obviously there are a lot of sellers at the moment. Yeah. It's not as one way as you might expect. Yesterday there were more buyers than there are this morning. Obviously that sort of bloody US session overnight has removed a lot of those buyers. But there are a few out there feeling about. I'm not quite sure whether they're going to get their fingers burnt this week. It's the kind of week that it's hard to read because that the drop in the last few sessions has been sort of as astounding as the index's rise in the last few weeks. It's been the same kind of sentiment-driven, short, sharp shock as you saw the very sharp rise over the second half of December and the first half of January. So, like I said, our clients, there are buys, but it is basically selling at the moment. I think people have been scared off by the huge drop in the US markets.
Connor, thank you very much indeed.